Hi friends, as promised, I'm back with one more video. So this video is going to be on how to reduce the margin smartly without deploying, pumping any extra capital. Okay, so this is going to be like a very simple video. I'm not sure like majority of the retailers are aware that without putting any extra capital, how to reduce the margin. But before we actually jump start with the video, I would strictly recommend you guys to please do your homework, just because we have the option of reducing the margin. So please do not use this option until and unless you're like very much comfortable, because it has its own pros and cons. So whenever you are trying to reduce the margin, definitely it has its own consequences. Okay, let me take you to sensible. So now, just for the demonstration purpose, again, don't come back to me saying that how to reduce the margin in iron fly, how to reduce the margin in debit spread, all these things. So just for the demonstration purpose, I'm taking you the ratio spread, because you know, right, ratio spread is something like we have one buy position and we have two sold positions. Whenever we get into all these margin issues, that will be only when you want to sell any naked call. So I'll just go to bank nifty. I'll go to the ready-made option in the sensible. Let me select this, go to others, and then let me select the call ratio spread. We all are aware, right? Call ratio spread is one buy position and two sold. See, one buy and two sold position. So your capital required is 1,38,000. Simple. Now let's say you have deployed the ratio spread, call ratio spread, with an intention of market going slowly up, so that you will be like getting with this 8% profit. But all of a sudden, right, market is supreme. Market started reversing. Slowly it is going down. It went like 1%, day 1, day 2, day 3. So maybe some sort of critical support has been breached. Let's say this was your view, right? Market was standing here. Right, market was standing at the support. You thought maybe slowly market will go up. Right, if this happens, you will be able to trap the market into this green zone. You will get up with 8%. But now what happened? This critical support has been broken, retest, and then market is slowly going down. So when the market goes down, you have to think about mitigating your loss. Yes, call ratio spread doesn't have much loss on your put side, because it has basically one buy and two sold positions. You have deployed in such a way that your loss is very minimal. Now, if at all the market keeps going down, the only one of the adjustments what we can do is like start selling the naked call from opposite side. So then you will be able to mitigate your loss. But now the question comes off, right? I do not have the capital. I do not have any extra capital to start selling the naked call. So how should I do? Okay, let me show you. Let's say you are planning to, market is going down, you're planning to do some extra selling, but you do not have the capital. Let me show you. I'll go to edit. Okay, right, I'll try to sell this call. Let's see, right, I'll try to sell this call. The moment I sell this call, check the capital. It has increased to 2.57 lakhs from, see, I'll deselect, initially 1.38 lakhs. So you need almost like 1,30,000 extra capital, but you do not have the capital, but still you wanted to mitigate this loss. See, the moment I sold a call, I was able to mitigate my loss of 1,500 to 900. That's the beauty of doing the adjustment, right? That's the beauty of deploying the ratio spread. If you deploy the ratio spread, if the market keeps going up, you'll be able to get into profit. If the market keeps coming down, you'll get into loss. Just to mitigate your loss, what you have to do, you have to start selling from the call side naked. That's what you have done. See, if I deselect, this is your loss of 1,150. The moment you sold a call, you are able to mitigate your loss on the call side. As and when you start selling more naked, so you'll be able to increase. Let me show you. If I increase it to 2, right, definitely your capital has increased drastically, but your loss has mitigated to profit. From 1,500 we made our profit to 3,000 by just getting this extra sell. But the question is like we do not have the capital. Let me get it to 1. So what you have to do is, like simple this, I mean, many of the retailers, many of the traders do. So what you have to do is like go to add edit option chain, look out for any strike which is trading at 8 rupees, 9 rupees, 7 rupees, right? What for the demonstration purpose, what I'll do, I'll just buy this, just to get that, just to reduce the margin. What I'll do, I'll just buy this one. That's it. See, the moment I buy a naked call. I'm buying a naked call. See, if I deselect this, your capital was 2,57,000. The moment I bought a naked buy, your capital has decreased, your margin has decreased to 1.95 lakhs. So now what you have to do, if you're okay to give away this 8 rupees premium as an edge, see what does the broker terminals do? I mean, do you think they will check all your legs? Okay, this guy has deployed a ratio spread, okay, so for that is taking this buy edge. Do you think they will do? Because they have like millions of users, right? So for them, they will calculate your overall trade, okay, your overall margin is the moment you buy one call, so they will think that okay, you are edging your position. But are you edging? You are buying this call just to get the benefit of the margin. So if you want to again reduce your margin, what I can do, I can just increase the quantity. That's it. See, now 1,32,000. What was your original fly? Or what was your original? 1,38,000 was your original, right? Your original ratio spread. Without increasing the margin, I was able to sell one more naked call, right? One more naked call. Capital was showing by just buying this two naked buy option. The same capital, my capital is 1,32,000 only, but still I was able to sell one more call with the same capital by just sacrificing. How much you're sacrificing? Let me show you the calculator. You should do all this calculation, friends. Okay, this into 2 quantity, right? Into 2 into 25 is the bank nifty lot. By just sacrificing 417 rupees, you are able to mitigate, you're able to reduce your capital from 2,57,000 to, that's it, to 1,32,000. Now I'll just leave it to you, right? If you want to even reduce more, either increase the quantity, but you should be able to give away this this debit, because just in case if this has become zero, this has to become zero, you will be like losing 425, another 225, 750. So by just sacrificing 700 rupees, you are able to reduce your margin from 1,32,000. Now the moment you bought one more buy, so why can't you increase your 2 quantity? See, again 1.8 lakhs light, right? Your profit has increased on the downside. So this is the way you have to play. And if you want to like become more aggressive, if you want to give like less, if you want to reduce your margin, what you have to do, you have to make it more aggressive. See, I'll make it to 9 rupees. See, I'll make it to 11 rupees. So as and when you make more aggressive, right, if you are going for more premiums in terms of buying your edges, your capital will start decreasing. See, if I go very aggressive, see 1.68 lakhs. Even if you want to go for 3 lots, you can just go for 3 lots, right? If you want to reduce this margin, what you have to do, you have to become very aggressive in terms of buying more premium. See, I'll go one more time. I'll go for 1 second, right? 11 rupees, or else you have to increase the quantity. See, the moment I increase 2.74 lakhs, the moment I increase, this has reduced to 1.9 lakhs. The moment I reduce the quantity or increase the quantity, now this has become 1.61 lakhs. So we started with 1,38,000, right? And we are able to sell 3 additional calls, friends. 3 additional calls we are able to sell with the same capital, almost like just by increasing how much? 20,000 by just getting this buy edges. Got my point? So this is debatable topic, but I will still recommend you to play out with your original capital. But worst case, in case at times if you are running short of your capital, if your capital is stuck somewhere in your swing tradings, in your intraday, but still you wanted to do these adjustments, right, you can just leverage this facility by buying the edges, FAR OTM edges, which will give you an option of minimizing your capital. So once you get back your capital, you get rid of this your buy position and increase your capital, so your trade will become balanced. All right, thank you friends, hope you have enjoyed this content. So if yes, give it a like, right, subscribe my channel, please share with your friends, right? It makes sense for you to give it a like, at least for the effort. All right, thank you.